Hey there, this is Nick from Income Digs, and today we're diving into advanced techniques for QuickBooks Online specifically for real estate investors. So whether you invest in long-term properties, short-term properties, you're a flipper, you're a wholesaler, this video is for you. We're going to talk about the key techniques that really turn QuickBooks Online into a powerful tool for you and your business. Even if you're a bookkeeper trying to get into this niche, I promise you this video is going to have a ton of really important content to make sure that you get your books in line. So we're going to talk about some really advanced techniques here, all of which are in my end-to-end program, Real Estate Accounting Bootcamp. Definitely check that out in the description there, but we're gonna get into it here. A couple assumptions before we start. I'm gonna be demonstrating everything in QuickBooks Online Plus or beyond. Most everything can be done in some of the lower versions. I'll call out when they can't be, but I do recommend that you at least check out QuickBooks Online Plus and beyond. The other thing is we're gonna be talking about customers and classes and distinguishing between properties and projects. You can use either of those techniques. I'm gonna be mostly doing it with class. I'll show you customers as well. If you wanna dive into that deeper, we have some videos on customers versus class. Let's get into the advanced techniques for QuickBooks Online. And specifically, we're going to get into these 5 here. Multiple business entities within one subscription, products and services, recurring and proactive transactions. That's something nobody's really doing. Owner's investment, we all do that, but we're not sure how to tackle it within QuickBooks Online. And billable expenses, making sure we don't lose money through tracking expenses that we should then charge to our customers. So let's get into it. And I put multiple business entities as the first one because that is a quick hitting game changer, okay? So most people, when they sign up for QuickBooks Online, as real estate investors, we often have multiple entities, right? We have different single asset LLCs, and we have all these different employee identification numbers. And most people will tell you, CPAs will tell you, QuickBooks will tell you, you need a separate subscription for each. I'm here to tell you that that is not the case. Absolutely not. We need to be able to scale our business, and to do that, we can actually use something built into QuickBooks Online Plus and beyond to have multiple entities in one subscription, and that's location tracking. So let's get into this. This is an absolute game changer for myself and for my students. Okay, so what I have here is a balance sheet. I'm showing it as of 2018 just so it's clear and simple. And I have a bunch of stuff, actually not that much, but I have some cash in the bank and I have some property owned. Okay, so if we have multiple entities, what your CPA is going to tell you is that you better go and sign up for a new subscription. I'm here to tell you that's not the case. We're going to turn on location tracking. Okay, so right now I'm going to go to Account and Settings, and this is QuickBooks Online Plus and beyond. I'm going to go to Advanced and Track Locations. I'm going to turn that on. And we can actually change the label. You see, I have my label set as business. So this is an advanced technique, no question about it, but it unlocks so much potential. So now what I can do is I have my balance sheet here. And right now, if I display my columns by businesses, nothing will really show up because I haven't done anything with it yet. But I'm going to dive into a couple of these transactions and show you what this can do. So I'm going to go into this land transaction. And what we're going to do to kind of demonstrate this, we're going to assume that we have 2 entities. Okay, one is JMB Investments, the other is 122 Buffalo Street Holding Company, right? That's how a lot of us are set up. We have these different holding companies. So I'm going to dive into this purchase of property transaction, and you can see that business shows up here. I'm tracking property specific information with my class here, but we can put my business in here. So I'm going to say that the business that owns this is JMB Investment. Okay, so I'm just going to click down here and I'm going to indicate business. Now, a key factor in using this feature is that every single transaction and every single line of a transaction must absolutely have the business populated. If we don't do that, our balance sheet is going to be off. We don't want that. Now, there are some potential pitfalls of this strategy. I'm going to show you those, but I guarantee you the positives way outweigh the negatives. I tracked these transactions to JMB Investments. The rest I'm going to do to this 264 Union Holding. All right, those look good. I'll save and close that. Then I have one other transaction as well. I just had like my initial cash investment. I'm going to do that one as well. Okay, so I'm going to pull this investment up. And here I have cash I put into my bank accounts. So I'm going to say that some was for JMB Investment Business, some was for 264 Union Holding, and then I'm going to split out my owner contribution as well. Okay, so I'm going to say that I have my owner's contribution, $75,000 was for JMB Investments, and the rest, the other $100,000, was for this 264 Union. So 2 entities, and we're doing in one set of books, okay? Now, one huge benefit of this is I don't have to adjust my chart of accounts. I don't have to adjust my vendor list, my products and services, which we're gonna get into next, all of that. So let me save and close this. All right, now if I go back to my summary report, and my balance sheet can now be displayed by business. So now I have 2 businesses here going across in my balance sheet. Now, this is great for you internally and for you to manage your books and understand what's going on, but I don't recommend that you send this to your CPA because they're gonna go crazy and they're gonna say, you can't have 2 subscriptions in QuickBooks. Don't worry about it. You're gonna be able to get them the report they need. Say, for example, they need a balance sheet just for 264 Union. Customize, filter. Business is 264 union, run that report. Now that I've filtered that down, I no longer need the column to show up, so I can just do total here. And lastly, why don't I change the name of this to say 264 union LLC balance sheet. Boom. They have everything they need to do their taxes, right? To do my taxes. So this is an absolute game changer. It's not only on the journal entry either. When we log expenses, we have the business there as well. So we're going to be using this on every single transaction. This is going to allow us to have 1 to 10 different entities within one subscription. And it's not all about just saving the subscription money. It's about the setup. It's the idea that we can have one consolidated chart of accounts, one list of vendors, one list of products and services, I'm going to show you in a second, and one list of saved reports. Setting that up 2, 3, 4, 10 times for all of our different entities in multiple different subscriptions is not sustainable, and it's not a good way to scale our business. So multiple business entities in one set of books. I have some follow-up videos on that, and we certainly talk about that in depth in our course in the membership as well. Moving on to products and services. So products and services is potentially one of the most underutilized features within QuickBooks Online for real estate investors. When we are recording transactions to like renovations, what most people are doing is they're using the category here and they're probably tracking something like rehab expenses, okay? Rehab costs, which is fine. Now, what you don't want to do, and what I see done often, is tracking this to a super high detailed list of categories. For example, demolition, foundation, rough electric, rough plumbing, etc. Right? We don't want to do that. That's also not sustainable. We get a P&L or a balance sheet that goes way out of whack. So we do want to keep it generic when it comes to our profit and loss and our reporting, but we do have value in potentially having those categories. So how do we find the middle ground? We do products and services. What I'm going to do here is I'm just going to log this $5,500 for rough electric just to show you what it would show up like in our books here. Do 122 Buffalo, save and close this. Now, I currently have this set up so that my rehab costs can go to net income. You may or may not have that set up. I'm not going to get into that in this video, but you could either go to the balance sheet or the P&L. In this case, it's going to the P&L, profit and loss right here, 5,500, okay? Now, there's nowhere here that I can see that it's on rough electric. I can drill down into it and see the words rough electric, but I can't do any reporting nor any filtering on it. That's where products and services comes into play. So products and services, often referred to as cost codes or items if you're using QuickBooks Desktop, is an amazing feature that nobody's using. So I'm going to go to my accountant settings and turn this on as well. I'm going to go to expenses and I'm going to do show items table. Hit that button right there, turn it on, save. Now we've turned it on. Now your next step, if you haven't set this up yet, is to add your products and services. I have tutorials on how to do that. I have lists that you can use if you're not sure what those categories are, but generally speaking, they're your construction categories. So whatever level of detail you use to budget for construction, when you're building a budget for a flip or for a long-term renovation, I got to do the roof, I got to do framing, all that stuff, right? You're going to have categories for budgeting. Whatever that level of specificity, that's what you're going to add to QuickBooks as well. So if I go to my products and services, I'll show you what I'm talking about. This is a list of those categories. Okay, so you can see here I got framing, I got rough structure, rough plumbing, rough electric. This is my list. Your list is going to be a little bit different. You can use mine as a starting point. You want to get these items into QuickBooks Online. And then here's the magical part. When we set these up, we're going to map them. We're going to first indicate that you purchased them. We're going to map them to the exact same expense account that we were using in category. So now when I go to say, let's go to that transaction, that $5,500 for rough electric, what I can do is instead of logging it to the category, because I've turned on my items table, that first step we took, I now have this below here. So now I can do rough electric, right? Now this of course assumes that we've pre-populated those lists. So you gotta do a little bit of work there. $5,500 on rough electric. I can indicate my customer project. In this case, I'm just gonna go to class. 122 Buffalo. I'm gonna hit the garbage can on this one. I don't need that one anymore. And I'll save and close. So now, this will show up in the exact same place on my P&L or your balance sheet, whatever you're using. But now when I drill down into it, I can now filter, sort, group by my products and services by my cost categories. Okay, so if I click run report that way, you can see I have my stage, my rough electric, and how much I spent. This is only one transaction, nothing too exciting about that. But if we were to go to a project, for example, that I probably have in here, we can see what it might look like. All right, let's take this one, Central Park, this flip that we did. We got all this rehab cost, $29,000. Actually, this one might not be that great. Let's see. And we can go by product and service. Yep, you can see that split out. And let me just show you, maybe I have one more example in here as well. Let's do this 264 union. 16,000, yeah. I don't have too many good ones in there. But basically what we're able to do is we can see all those renovation costs split out by those products and services, okay? I can group by product and service. That's going to give us a super high level of detail, okay? And then we can compare that against budgets. We know how we're doing against our budgets. This is huge. And this is a big piece that nobody's really doing. If you're using any kind of external software, Buildertrend, anything like that, you're going to want to be using this because they're going to ask you, how do we connect to QuickBooks? And by product and service or by cost code, that's the connection point. Absolutely. Next thing I want to talk about is recurring transactions, okay? So you need to be using recurring transactions if you're using QuickBooks Online. Probably the most obvious reason to do it would be for invoicing, okay? And that one's great. We're going to talk through that right now. If I were to say have my customers in here and I'm invoicing my tenants, or if I'm a builder, if I'm invoicing my residential remodeling customers, if I'm doing that, we need to be using recurring invoices, okay? So with a recurring invoice, we can take an invoice that we've created. So let me just create one real quick. So I'm going to create this invoice. You'd have to create one to start. So let me just put in this like 456 Maple 950. Okay, save it and make recurring. Okay, so this is an absolute must. If you have tenants, you're going to want to schedule these in advance. Now this doesn't mean they're due in advance, but what this does is, let's say that this is a invoice that is dated the first of every month. It'll create it X days in advance, in this case 10. It'll send it to your tenant, so they'll get it 10 days in advance, and in most cases, they're going to pay it right away. Now, I'm going to ask you to include unbilled charges. This is going to be the last thing we talk about today. This is going to be crucial, okay? You can decide whether you want online payments to show up. You can add anything else you need in here. Save those templates. What people aren't doing with recurring invoices enough is using it for proactive expenses. And the most common or the best use case for this would be for mortgage payments or any kind of regular payment where the total amount is the same, but our separation might be a little different. Okay, so common issue we have is we pay our mortgage every single month. And your mortgage payment almost definitely is split up into at least two categories, sometimes three. One category is your principal, one category is your interest, and the last category is your tax and insurance escrow, maybe even PMI in there. And so to create a transaction every single time it comes through and split into those three lines is very, very time consuming, and it's subject to errors. So what I encourage you to do is to take your monthly mortgage payment and create a recurring expense so that the total amount always stays the same. So in this case, I have these amounts. That gives me my total every single time of $19,1335. Okay, that's always going to stay the same. And you're going to separate out in this template. You're going to separate out my principal. This is my loan payment, my interest payment, and my tax and insurance escrow. And you're going to put in at whatever date you're creating this recurring. You're going to separate out how much goes into each of those. Okay, all of this takes a lot of time to add. So if we create this template, it really helps us out. Now, recurring expense versus recurring bill. If it's set up on auto pay, which I encourage you to do, it's a recurring expense. If it's something that you actually have to physically click and make the payment every month, do a recurring bill. Either way, it's going to hit your P&L, it's going to hit your balance sheet the same. It's just going to help you understand what you owe. So create this recurring expense and create it so that it creates itself 10 days in advance. It comes out of the right account on X day of the month, etc., etc., etc. The total is very important here. Now, what is almost obvious to this is that these amounts are going to change every single month, right? That's fine. What this will do is it'll create the expense, the total will be there, it'll match to our banking feed. We've checked the box on reconciling, okay? We know that the amount is perfect. And then we, or our VA or our bookkeeper, can dig into each monthly one and just go in here and tweak these amounts. Or better yet, just wait till the end of the year or do a journal entry to move them. Okay, so I want you to be thinking about recurring transactions and how this takes a long time for me to create this one transaction, okay? Especially if I have to do it every month times the number of mortgages I have. If we can create a template for this mortgage, that means that the reconcile part's kind of taken care of. And then it's just a reconciling of our principal and interest payment. Again, something that's really easily done by a bookkeeper or a VA. I have a tutorial about this. I have a course, Super VA. Check that out as well. In Real Estate Accounting Bootcamp, we dig into this in a great level of detail about how we can teach our VA to go in and reconcile our principal amounts against our loans. This is an amazing, amazing tactic. Students who have implemented this are saving a ton of time. I definitely want you to check it out. All right, we're going to talk about owner's investment. So we all do this. We all invest cash into our business and take cash out of our business. How do we deal with it? And how do we deal with personal expenses? Okay, so again, this isn't something that I want you to be worried about, but we often spend either our personal card for business expense or our business card for personal expenses. So how do we deal with that? Well, let's get to that in a second. First, let's talk about how we put money into and take money out of the business. That's through equity. You see, I already have some down here. So whenever we put money into the business as an investment, we're going to track that as equity. And I encourage you to split out your equity accounts into your different partners. So here I have Nick, okay, right here. And I also have one for Juliet. So if I were to record a deposit, the business is receiving money, okay? To which account did it get deposited? Where did it come from? Juliet is an employee is what it would be called in here, even though we're not doing payroll. We're going to do owner's investment from Juliet, initial investment. Let's say that she's putting in $25,000. Okay, now I do want to track this for my business, so I'm going to say JMB Investments, class is going to be general. So this is Juliet putting $25,000 into the business. When I do this, we're going to see that she's put in some money. So here's my total investment. Here's how much each partner's put in. I don't need to go nuts with percentages and anything like this. This is just going to track the cash. If and when we ever sell or disperse the business, we're going to have this as a record to understand how much money we put in and how much money we take out. So when we take out money, it's an expense from the business, or it's a check from the business, or a journal entry, whatever. Let's say that I wrote an expense to myself. Here I'm going to say that I paid myself a draw. Okay, now you could do this in a journal entry if you want, but here's my owner's contributions distribution. That's why I have it as one account. Let's say that I take out $55,000. Maybe we sold a property and that's what we want to do with it. All right, I'm going to save and close that. So that will reflect on my total. If I drill down into this, I'll be able to see the positives and the negatives that give me my net. All right, so that's how you track it. Now, what happens when you spend money on your personal card? How do you deal with that in QuickBooks? First of all, of course, it should go without saying, try not to do that too much. Try to have a personal card that's separate from QuickBooks Online, then have your business credit card, your business checking account. If you own your properties in a personal name, have a separate card for that. That makes it a lot easier. But we're all human. I do this all the time on mistake. You can do it too, okay? So if you spend money on your personal card, but it was for a business expense, really easy. Just go to a journal entry, indicate the date that it happened. We're going to say that owner investment. Okay, so let's say that Nick spent money, I spent money on my own account for something that's business related. How much was it? Let's say it was $125 for like repairs and maintenance. Okay, what was the business? What was the class? This could be your property. In general terms, any contribution I'm doing mostly to a general class. And then here it's repairs and maintenance. Okay, so let's say that I went to Lowe's and I spent $125 on a new toilet or something like that. Okay, so I can go ahead and do that. Let's go 122 Buffalo Street. So this is me saying that I spent this money. Now this won't match to any bank transaction because my personal bank account is not and should not be connected to QuickBooks Online. But this kind of checks two boxes. One, it records that the payment was there. And two, how do we pay for it? Well, it went into my owner's investment. And a lot of us go kind of crazy trying to pay that stuff back. And you can do that, but I think more important is that we track it. So what I would do here is just track it, and then maybe when it's time for my next draw, maybe then I give myself $125 less of or more of a draw, right? To kind of balance this out so that Juliet and I are kind of more even, all right? Now, if you want to use products and services, notice that you can't do that with a journal entry. So if you wanted to do that, then what I encourage you to do is create kind of a phantom account for personal spending. Okay, so like a personal checking account. Don't link it to your personal bank account, but then you can go in and create an expense. Okay, so let's say that this was for Lowe's repairs and maintenance, almost the same exact thing. And I said I use my personal account, whether it's a credit card or not, kind of doesn't matter, credit or bank account. Okay, now you can go down to products and services. Let's say like Rough Electric again. Okay, for 122 Buffalo Street, JMB Investments, great. Okay, so what we do with this then, we kind of say we spent it on that card. Now that card is not owned by the business, right? But to get it into my net income, I had to do it that way. And now what this will show is my personal checking has a negative balance of $6,500. So all we do there is we zero that out with a journal entry. So we're going to do a journal entry as of that date, or just wait till the end of the year. It doesn't really matter. 12/31/2018 in this case. And we're going to say that personal checking account, well, it's not owned by my business, so I need it to show zero on my balance sheet. So I'm going to increase it by $6,500 for JMB Investments for general. And how did we increase it? We use owner's investment. All right, so this will zero it out, and it'll accomplish this by providing an owner investment number. Zeroes out my personal checking, and it goes into my owner's investment. All right. So when we think about spending from personal or from business, etc., that's how we can record it. So don't be afraid of it. Try not to do too much of it, but we can always use equity to show it. And if you need things to balance out, just release draws in a different way so that the amounts total perfectly. All right, the last thing we're going to talk about is very, very important. It's billable expenses, okay? So if you're invoicing out to your tenants, which a lot of you are, whether you're a property manager or you're an investor managing your own properties, okay, if so, you're going to be tracking your customers here. You're going to be sending invoices to them. And I want you to be tracking your expenses as billable, all right? So to set this up, I currently have it turned off. We're going to go to Account and Settings, and we're going to go to Expenses. And you should do this even if you're not incurring many billable expenses, just have it on as an option. Because if you don't, you're going to forget it's possible. And we're going to indicate right here, track billable expenses as income. You could even include a markup if you want to. Now, most investors, property managers don't mark up items, but if you're like a builder or remodeler, you absolutely are. And again, you can do it and then zero it out later. Okay, I'm going to turn that off for now. So now, when I go to an expense, so let's say that I spent money from my JMB checking account, again, Lowe's, whatever, right? Lowe's, Home Depot. Okay, I have a payment date of February 7th, and let's do repairs and maintenance right here. Notice this billable thing right here. So if I have $125, actually let's change it, let's go $250. I can mark this billable to whomever the customer is. So here I can have my customer, 122 Buffalo Street, Olivia. Okay, class 122 Buffalo Street, great. Okay, let's save and close that. Now, this didn't have a markup in it. Again, if you turn that on, you'd have that additional option. So now I can go to Olivia when I create an invoice, and when your recurring invoice creates, you're going to have this little section over here where we can add the billable expense. And now to this, I can add my rent. Okay, so I have my rent plus my billable expense. It's linked. Now, instead of just owing me the $850, she owes me the $850 plus the billable expense. And that goes, okay, when I create this, date, good, that's going to go to an income account that is designated by QuickBooks that you can adjust. I usually call it billable expenses income. So if I go to my P&L now, let's go to my P&L via the balance sheet, go to my net income, you're going to see there that I have my billable expenses income showing up. All right, so definitely turn that on. And as you do, you're going to find all these different ways that you can start tracking. If you're a property manager, this is a really good way to incur expenses on behalf of the owner and then invoice them for it. Now, it doesn't mean you have to collect payments from your owners because in most cases, you're going to be paying them out. But tracking it as an invoice, then your credit comes in. We can easily understand who owes who what. It's a really, really good technique to kind of let the system do the tracking for you as opposed to you trying to figure out all those billable expenses that you need to keep track of there. All right, so we went through it in rapid speed, but I wanted to make sure we got in these 5 advanced techniques. I really appreciate you checking this out and tuning in. And I imagine there's gonna be comments and questions. We have a lot of offshoot videos that go deeper into all these topics, but I wanted to make sure we got them all in one place. So leave your comments, leave your questions. I look on YouTube all the time to answer those almost every single day. So I'm looking forward to collaborating with you there. Definitely check out our end-to-end course, Real Estate Accounting Bootcamp. We talk about all these topics in very detailed way, okay? We also have our community available where I am interacting with students like you, whether you're an investor or a bookkeeper. I'm interacting with you all the time. We have live Q&A sessions as well where we go into these topics, go into nuanced details, and really figure them out to make sure that your books are working well, that QuickBooks Online is an amazing tool for you and your business. Also check out the free resources we have available at incomedigs.com. We have free downloads, templates, products and services, chart of accounts, all of that. If you like what you saw here, I encourage you to subscribe. That way you're stayed up to date on all of the new videos we have coming out. It's time to put this into action. I want you to go into your books and start thinking about how you can put these 5 tips into action right now. And I look forward to seeing you on the next video.